Hey, welcome back to the Crowdfunding Demystified podcast. My name is Salvador Briggman, and on this episode, we're talking about equity crowdfunding and specifically Magnet Analytics. So this is an entrepreneur who has raised just under $60,000 using an equity crowdfunding campaign, and they're sharing with you on this episode, number one, how they were able to do this, how they were able to pull this off and raise money, get investors from the crowd, which I think is always super exciting, as well as one of the cool things with equity crowdfunding is you don't necessarily need lots of investors in order to earn a lot of money or in order to get a lot of investment for your capital, for your company. So these guys, they only have a little bit over 100 investors, but still they're able to get more than just under $60,000 in funding for their business at the time of recording this introduction. So it's a very interesting medium, and there are a lot of ways in which you can run an equity crowdfunding campaign. So today's podcast actually is highlighting WeFunder, which is one of the platforms out there to be able to do a regulation crowdfunding raise. Now, regulation crowdfunding is a lot of a newer thing, but one of the reasons why it's been so much in the news is you can actually now get people to invest in your startup company who you do not know. And in addition, they don't have to be accredited investors. So in the past couple of years, this is something that's new that's come to light, but I would say when we're just getting started with funding companies, normally you got to do a regulation D raise, and it has to be with accredited investors, other words known as high net worth individuals. And that's just kind of like shield the general public from losses and stuff. But as the stock market grew, you could obviously invest in public companies, but you still couldn't invest in private companies very easily. Now that is all changing. So you can now invest in private companies, privately held companies, with an initial funding offering using regulation crowdfunding. So number one, you can invest in startups. Number two, if you're an entrepreneur, you can actually raise money under regulation crowdfunding. Now, I know this is a lot of new stuff, and this is something that I think is growing, grew a lot recently, and it's something that I want to cover a little bit more in this podcast. And I think that for me, one of the biggest sources of frustration with this industry is that we have a lot of people who are just now talking about this, and it's very lawyer focused, financial focused. A lot of people using big words and terms that I think, you call it expensive words, right? Really big terms that people throw out there. And I always hated that. I'm not really the guy that really likes hearing about, the financial capital of the company. Why don't you just say that the money company got, I don't really like it when people obfuscate or use words that are meant to hide what their services are if they're in the financial industry. Because it's really, they're just doing that so that you don't understand what it is that they do, which I think is complete BS, right? So I try to use my intelligence, my brain, my education, the things I'm learning to be able to distill some of these more intensive, areas of crowdfunding for you in a much more simple way, in a way that's with layman's terms, in a way that's easy to understand, no big words, no words that I think are just masquerading and trying to hide what actually, companies are doing for you or the ways in which they can help you. I try to make it as transparent as possible. And the way I do that is usually by putting out content for you. So for example, with equity crowdfunding, I wrote the book, Equity Crowdfunding Explained. This is a no-nonsense guide to equity crowdfunding. If you are interested in getting a copy, you can go to the link I'm about to mention and you'll get a copy on Audible. So this link is crowdcrux.com/equity audio. That is crowdcrux.com/equity audio, crowdcrux.com/equity audio. That link will take you to the Audible version of Equity Crowdfunding Explained. And I think that there's a lot of good stuff in that book. But if you want to do a campaign like this, you will learn exactly how to do that there. That being said, let's learn how this entrepreneur was able to raise just under $60,000 on WeFunder for Magnet Analytics. It is coming up right after this. This podcast episode is sponsored by The Gadget Flow. The Gadget Flow reaches over 28 million people, and they've been around since 2012. They are Indiegogo and Kickstarter experts. They featured over 5,000 crowdfunding campaigns. And if you have a technology or design campaign, it is a great platform to generate awareness and get backers. You can check them out at thegadgetflow.com/submit and list your project today. Eduardo, welcome to the show.
Thank you very much for inviting me.
Can we start by maybe telling listeners a bit about your backstory there? Because I know you've sold a company before. You're a seasoned entrepreneur. Can you give us just an idea of that?
Yeah, after a master's here in Boston, I started a company called Vigix, and it was based on my own experience in living downtown Boston, where retail is very expensive and hard to find, especially if you live in the high density, expensive area where there are no big box stores, right? So you want to get some regular product that you would get in a Best Buy, and you have to drive to the suburbs and get it. So it was a painful experience that I started thinking about why that's happening. And those big box stores are not suited to serve high density areas. They are very inefficient. And so I started thinking about automated retail and what was out there in the marketplace, which were really ugly vending machines that you cannot really place in nice looking places like the lobby of a building or premium train station like Grand Central Station, because they look ugly and they have this stigma and they take a lot of space. So I set out to design, and I'm talking about my previous company, to design a small footprint automated retail kiosk where you can buy products that you need on the spot, not products that you go out to shop, products that you actually you suddenly realize that you need something on the spot, but you're about to board a train and there are no stores around, and that's the market that we're focused on.
When it comes to your previous company there, how long were you growing this company? Did you exit it? Like what happened with that?
Yeah, so with that company, I went through the regular traditional route of raising money, which is friends and family, angels, and VCs. And it was super painful in my experience because we were outside the scope of the Boston investment community in terms of the buzzwords. As you probably know, all of the established investors, they follow the fashionable buzzwords to invest. Sometimes it's green technology, sometimes it's biotech, and we didn't fit any of that. So it became really time consuming and painful to convince them, and we did. We raised almost $5 million in that process, and but it took a lot longer than we expected. It took years to do that, and the at the end, the dilution was so painful, and the legal burden that we put into the equity structure was really not productive for anyone, any stakeholder. So it was not a good experience. But at the end, we created a platform, a technology platform. That previous company was just a technology platform, was not a retailer like the new one. So we ended up selling it to the market leader, which is the company that operates the Best Buy Express machines in the airports and other brands like that, um, because they were looking for a smaller footprint kiosk that could do the job for them.
So this is kind of like the technology that powers the kiosk, the technology behind it.
Correct, including the kiosk itself and the software, which is really the more robust part of the technology. The kiosk is just the tip of the iceberg. The real technology is in the analytics and the software behind what runs the network and the logistics, the supply chain logistics.
I mean, it takes a lot to get a company off the ground, to do the raising money, to assemble a team, like all that stuff. So you really, I'm sure you experienced a lot. Is there one tip you can kind of share with the audience in terms of what you learned through that entire journey from starting it to selling it?
Well, the first tip is try to develop or focus on why you're doing it, not what you're doing. People respond to purpose and not to things or to what you're doing. If you have a higher purpose, they get excited. All stakeholders, including employees, and everyone gets a lot more excited when you tell them, look, we want to show how this is done properly. We want to strive for excellence. We want to be a lot more efficient than the established retail, as opposed to we want to make money, right? Or
Yeah, definitely. How does this first company differ from what you're doing with Magnet Analytics?
So after I sold the company, I went to work for the company that bought my company. It is based in San Francisco, and my commitment was to work for a year. And one thing that I realized is that in the US, there are no brands that would be prepared to run a large network of automated retail, which is what those two companies were looking for, the company that bought my previous company and the company we created. Our customers were the brands, and they were supposed to own and operate the machines, and we were just providing the technology. But there weren't big brands ready to do that in the US. It's a new market. So after my year in that company, I convinced them to help me start a new company, Magnet, to be the retailer, to be the owner and operator of the kiosks. And they helped me start the company. And the main difference is that we actually are the store, and we're vertically integrated with the technology. We took a long time to run pilots in the new company. At the end, we had to develop a new generation technology after we found what was the right niche for us to grow. And we ended up developing the next generation of the technology, which is what we currently have. The whole idea is to create a very small footprint kiosk that looks very good, that you can place in the VIP lounge of Air France or Grand Central Station. Something that looks really good, that people are proud to have it, and that it instills quality and excellence. And the whole approach to the customer experience starts with that, and then with the user interface that makes it extremely easy and provides all of the information that you're used to have, such as images and reviews and videos of the product, and in a way that is very easy, intuitive, and quick to make a decision of $100 product.
Yeah, totally. I mean, I see these all the time as well. Like, I think it'd be so convenient if you forget your headphones, right? You're in the airport, or you need to buy a charger. Like, it just makes a lot of sense to me. And there are always like these little stores in Manhattan where they're selling things, and like you don't even need a person there. Like, you could just have an automated kiosk to deal with a lot of these issues.
Right.
Um, One
At the
question
end
I
of the
had for
day,
you
go
also
ahead.
was, so is this a subsidiary of like Zoom Systems, or is this a separate company?
It's a separate company. Yeah, it's my it's my new startup. But they were helping us at the beginning. But Zoom themselves, they had to restructure the company, and they ended up having to focus on their big format stores. So we actually ended up parting ways, and so we are completely independent.
Okay, makes sense. When it comes to this, I mean, there are a lot of other companies, obviously, that see this huge transition to automated buying, seeing this transition when it comes to buying patterns with e-commerce. What do you think is sort of your sticking out point? Because obviously, you mentioned having some experience already in the industry. Are there any kind of points you think that are like a competitive advantage for you, if you will?
Well, the future of retail is going to be a hybrid of online and physical retail. And this is exactly what we're doing with the machines. So, online retail is not really killing regular retail, it's just making it transform and making it seamless to, for example, buy a product on your phone and then pick it up in the closest kiosk. And I'm not sure if I answered that question, but did that answer? Go ahead.
When it comes to like how you stand out from other competitors, right,
Oh,
in the
okay. Yeah.
industry.
Yeah. So the core innovations are the a compact dispensing system that makes this kiosk very small. In some cases, 20 times smaller with the same capabilities. And that is a huge thing because the smaller the kiosk is, the better the location you can get. And we are after locations that are not available for big format retail. Even bigger machines are not able to get to the locations that we are able to get to. Places that have the traffic, have the need, but don't have any other retail. And that's the niche that we discovered in our pilots, and that's what we're focusing on. The other thing is that once you have a small kiosk, you have to have a very agile resupply system. In our case, our kiosks are monitored in real time, and we are constantly doing analytics and predictive analytics that
Hmm.
determine when you have to trigger a restock. So the restocks are done by packing the product that you need specifically for each location. You send them via a courier service to the kiosk, and the product is inside a container, and the container just gets swapped in the field, and it takes 30 seconds to do that.
Very
Um,
cool. Very cool.
so
Um,
That's very different from the other formats as well, because yeah, in their case they have to send a very specialized person that has to open the machine and place the products one by one. So it's a lot more efficient, what we do, and that turns
Yeah,
converts
definitely.
into having the product available all the time.
Now, with this project, this company, this startup, you kind of went a different route. Like you're now exploring this whole equity crowdfunding thing, right? And it's kind of new. I think a lot of people don't even know that you can do this kind of campaign, right? How did you find out about it, and like how's it been working for you?
So based on my previous experience of raising money the traditional way, I said, look, at this time I have to try something else because it really was very, very painful. I started to do a lot of research, watch your videos on YouTube, and I was,
Oh, I
very
didn't know
intrigued.
that. That's
Yeah,
awesome.
no, I'm a subscriber of your channel. So I said, look, let's give this a try. It is new, it is almost experimental in terms of equity crowdfunding, and especially if you're raising more than 1 million, right? In our case, we are raising the maximum for this type of raise, which is two periods of $1 million, so 2.2 million actually. So we just opened the campaign a few, like not even a week ago. So we're hoping to get to 2 million within 6 months. So the idea is that instead of having to, it's more, we think it's more meritocratic. You get reviewed by the platform, and then you have to have everything perfectly, even more than when you're doing due diligence with a VC. You have to you go through, an audit and all kinds of things that make force you to have everything in check. But the rules are written, like, there is a procedure, and it's everything is set up for you to know what to do and just do it. In the case when you're doing due diligence with VCs, they change their mind every second. It takes months and months and months to go through those due diligence, because they change the rules all the time, depending on the market, depending on a bunch of things that they discover. And here it's a very clear path that is not quick, but at least it feels more fair, less reactive. And go
Hmm.
ahead.
If you're worried about the fulfillment and shipping part of your Kickstarter campaign when it comes to getting out all those perks and rewards to your backers, rest assured I've put together a complete Kickstarter fulfillment and shipping checklist for you, and it's free. This is sponsored by the folks at Fulfillrite, and they thought that you should have this checklist as part of your arsenal going into a crowdfunding campaign. If you want to get instant access to this checklist and it's free, you can go to fulfillrite.com/checklist. Again, that is fulfillrite.com/checklist. Fulfillrite.com/checklist. Just go to that link and you can download it immediately. Well, when it comes to the research you were doing, there are a lot of different platforms out there. Was there a reason you decided to go with WeFunder?
Well, yeah, because equity crowdfunding is new. The leader of that market is still being defined. And I had to read a lot of articles, and the people that founded eFunder were the people that actually changed or lobbied the changes that enabled equity crowdfunding. So they really know deeply the rules, and their intentions are very novel, because they really want to democratize raising money for a startup, especially for companies that don't have the buzzwords of their local investors.
Definitely. Yeah, 100%. One of the things I also like about WeFunder is some of the statistics that they put out. I think they're doing a good job of sharing some of that stuff with the community. So basically, you decided you're going to do this, which is a bit more of a public way of raising money. Like you got to have a video, you got to have your campaign page, like all those kinds of things. What were you doing in terms of like the marketing side of it to get ready for this launch? Because you've already, I mean, you're only open for a week, but you've already raised 27 grand. Like that's awesome. I encourage people that are listening to the show to go and check it out and like watch the video. It's really professionally done. What were you doing with like the pre-launch before you went live here?
Well, to be honest, that's one part that caught us off guard. I thought that once you got accepted into the platform, they would do everything else, like all of the promotion, and What we're learning is that we have to be a lot more proactive in terms of placing ads for the campaign in places like Facebook and LinkedIn. And that is something that we're just going to start doing. We have not done any of that. But when you want to raise a couple million, then you really have to bring out all of the tools you have to be able to do it. So, essentially, we did all of the marketing materials in house, the video and everything. And we still have not done anything, like engaging a PR firm or anything like that. However, they insist that it is not a bad idea, especially if you want to raise a lot of money, to engage with a PR firm that guide you through the process of targeting the right audience through Facebook ads and other places.
When it comes to the investors thus far, are those people then from your network? Are they from WeFunder itself? Where are those investors coming from or discovering it?
It's a mix. One thing that I should have done, and maybe this is good advice for people that are out there, in our pilots and the development of our technology, we already spent close to $2 million in creating the company as it is. And when we got to the crowdfunding stage, we had no money. So we didn't have a reserve to invest as part of the round. So most of what we have gotten so far is from investors that are discovering it through WeFunder, and they are coming, participating. And we have also participated a little bit. Our investors have placed some token investments, but the strategic investors that I had lined up for the round, they went. They paused as the situation right now with retail is not great, so they are in wait and see mode, and they might come in and start really filling up the round, but so far it has been more organic.
hmm When it comes to the initial investors, is there something like, do they get an early bird special of some
Yeah,
kind for being the first supporters? How does that work?
yeah, for the first 100,000 we are offering a much better valuation, which is 25% uh, lower than the valuation after the first 100K. So yeah, and it is gonna run out pretty soon. So that's a really good deal.
The other thing I really like is that there's like no obligation where it looks like unless you hit your goal, your initial goal, which is 50K, I think pretty reasonable. People, if they want to, they can get refunded. It's not until you can see that the round is really going forward and you're starting to gain steam that people are really becoming, a part of the foundation, right?
Right. It is one of the platforms that has the a higher rolling closing limit. Um, that some platforms allow you to take the money since the beginning, and here they say, look, we want to make sure that whatever you raise, you can do something with it, right? And they said the minimum you have to raise is 50K to be able to start using the money. Um, and so yeah, so that's the limit. And before you hit the limit, anyone can just cancel their investment if they want.
Okay, that's really cool. I mean, I think that takes a lot of like, if you're interested and you're not sure yet, you can still participate and kind of see where it goes, right? So I really like that because that's also pretty similar with like Kickstarter and these other types of crowdfunding platforms.
Right.
So I want to talk a little bit more about the company and kind of your vision here because you've gotten a lot of people involved. Like I see even like Warren Buffett gave you a quote saying like ideas like this enable new and large markets. You look like you have a really strong founding team and timeline here. Maybe you can tell the listeners a bit about like where you see this going, like what your goals are with the company.
Well, if you close your eyes and think of 10, 20 years from now, automated retail is here to stay, and it's in the US. We're just scratching the surface. If you go to China or Japan, it's like going, traveling to the future. You already see a lot of this, that much more than the US. And because it makes a lot of sense, not for every product, right? But for a lot of product categories, this makes a lot of sense because to begin with, automated retail, the way we do it, takes about 12% the resources per dollar sold than a regular big box store. The regular retail format is very inefficient. And in some cases, you want to hang out in the store and you go for the experience. But in other cases, you just want the product. You just want to be able to make a quick decision, an informed decision. And that can be done automatically. And if you think about it, that's where the future is going.
In terms of the larger opportunity here I mean, I could obviously see this being implemented in airports. I could see it being implemented in subways. I could see it being implemented in a lot of different places. So in terms of like the market size for this, what do you think it will be like? Do you think this could be, $100 million company? Do you think this could be a really large company? What are your thoughts on that?
We are convinced that we can create $1 billion company in 5 years. That would take a very aggressive deployment and capitalization of the company, but we think it's absolutely possible. But we have planned for many different scenarios.
And are
Um,
you generating revenue already with the company?
yeah, but we deployed pilots, and we've been running pilots for more than 2 years to be able to get to the formula that we are focusing on right now. We've been running pilots where we tweak different, try different concepts, locations, marketing strategies, etc. And that's how we develop the next generation platform that we have today. And yeah, we do have some revenue from those pilots. And also so far we have generated more than 500,000 in revenue from those pilots, and also sponsorships like the one with Warren Buffett and Disney.
Reading through, there's this thing called Grapevine on the project. Like you can see what other investors are basically saying about it. So some people saying things like, if this company has a solid analytic to identify optimal product popularity and placement, is definitely something people like your strong IP. A lot of people like the vision that you actually have for the company. So it's really cool just to see. I think it's more interactive, right, with equity crowdfunding, where you can actually see why people are investing.
Absolutely. And, by the way, the company is called Magnet Analytics because of real value long term is going to be in the information that we get from the behavior of the customers using the kiosk, whether they buy or not. Once you have a network of 10,000 kiosks in the US where that is, people are browsing through the kiosk and buying or not buying, that's information that you can use that the brands can use to optimize their product offering, um, and also to make sure that you have what they're looking for at the right times, and also to react to seasonality. And for example, right now we are transforming our mix to include personal protection equipment, like sanitizing products and face masks in bundles that have different combinations of those products.
Yeah, that's
Uh,
a great idea. That's so needed too right now.
right. So at the end of the day, what we're doing is vital product that you need on the spot.
So I just have a few more questions for you here when it comes to your experience in entrepreneurship in general, because I think we got a pretty clear idea of what you're trying to do here with your vision. And we have a sense of why you're interested in equity crowdfunding, what that's been like for you so far, kind of where you're going. When it comes to like you as an entrepreneur, I mean, you already built a successful company, you sold that, now you're building a new one. What is your strongest skill set? Right? Like some people are salespeople, some people are marketing people, some people are good at creating teams. Like, what do you think your strongest skill set is?
Resilience, consistency in what you believe in, because there are always going to be a lot of problems and a lot of reasons not to do, and just get going with it, and change it, adapt it to the reality, and don't get discouraged. So if you were to see a movie of how what I went through, it's just it would be crazy, because it's, a lot of times it looks really bleak. But if you are convinced with the purpose, and that's why I started with that, asking yourself why you are doing it, have a really strong purpose, because you're going to need that when things don't work out, to inspire yourself and to inspire everyone else.
For you, what is the most satisfying part of this process? Is it having your team work together? Is it being able to impact customers and get that feedback? What are you guys, I guess, most passionate about when it comes to the entire process? Because you got to be about something, right, to get through all that.
Yeah. So I love the challenge. I love, I actually get bored when things get easy. If you don't like problems, then you're not going to succeed. You have to love problems, because you can promise yourself that you'll find a way to solve them, no matter how bad they look.
You seem to like going up against odds, right?
Right. And also, after that, imagining something, the creative process of imagining a vision and then seeing it take a life of its own, become a reality. It is always, at the end of the day, you always have to adjust it to make it work. Seeing how that, from a dream or from a plan to reality, that is very satisfying.
Well said. So my final question for you, and this is kind of more of a boring question, honestly, but for those other startup founders out there who have to consider raising money, what is something that you wish you knew about that process of either doing it traditionally or the way you are now?
I love crowdfunding. You have to understand it before you get into it. It's not easy. You have to do it right. People just hear about the successes. And really, there are a lot of companies that don't succeed doing it. And save some of the investment, the initial investment, friends and family, or some of the capital to put it through crowdfunding to begin with. That's a mistake I made. We spent all of our investment before we went to crowdfunding, and that that makes it a little bit harder to get started.
Yeah, it's almost just like always strategizing for your next raise if you're a startup, right? And like figuring out how you can funnel things together in terms of social proof and leaping from lily pad to lily pad. If that makes
right,
sense.
because you have to show momentum, and at the end of the day, it's just like the stock market. In many cases, people are just looking at the momentum, and they go to places where everyone is going, even if the company doesn't make sense. So that, unfortunately, is a reality that you have to prepare for, and that's why I'm saying save some of that initial money to funnel it through the campaign so that you can show momentum.
Great. Well, guys, if you want to go and check it out, go to wefunder.com/magnet.analytics. That will take you there, or you can look it up, Magnet Analytics, on WeFunder, and you will come across the campaign. Thank you so much, Eduardo, for coming on the show. Also for watching my YouTube channel. Really appreciate that. And thanks for being a subscriber.
Thank you. I'm a big fan.
Thank you for listening to this episode of the Crowdfunding Demystified podcast. I use that word demystified because I think that when it comes to marketing, when it comes to finance, when it comes to law, really any kind of discipline, accounting, people will use words that are almost like for the profession, or doctors, right? There's a certain vocabulary that doctors will use. There's a certain vocabulary that people in finance will use. There's a vocabulary that marketers use. And they just kind of throw around words and expect you to know what that is, or they kind of use words to actually mask what something is, in reality. And usually those kinds of words, when people use big words, I find that most often they're full of BS. And usually they're using big words to try to just confuse you, because they want you to feel like that they know something that you don't know. So the reason why I started this whole podcast, Crowdfunding Demystified, was that I wanted to break down crowdfunding for you in a very simple, no-nonsense fashion, in a very step-by-step way, so you can even teach it to like a toddler, right? There's no reason you have to be intelligent in order to run a successful startup fundraiser or in order to run a successful crowdfunding campaign. Actually, I think that if anything, you have to be gutsy, right? And you have to surround yourself with smart people. And I try to use my intelligence to be able to deconstruct and break this down for you. So if you're interested in like learning about this and how this could work for your specific case, you could go go to the link I'm about to mention and book a one-on-one coaching call with me, and we can discuss the specifics of your project. So that link is crowdcrux.com/coaching. That is crowdcrux.com/coaching, crowdcrux.com/coaching. That link will take you to a form. You can fill out a little bit of information about your startup. You can tell me why it is you're looking to raise money using equity crowdfunding, and we can schedule that call ASAP. In addition, I have a book out there, The Equity Crowdfunding Explained, which is available on Audible, and you can check that out at crowdcrux.com/equityaudio. Hope that helps you out, and also hope you explore this new way of raising funds. And that's some of the advice I'm putting out is going to help you be able to do that. Would love to hear from you. Thank you so much for listening to this episode, and I will see you next time.